interesting areas that I think with this new tax legislation is going to be the impact on the M&A and transaction market. There's some specific impacts, but we already started at a point where the M&A market was pretty robust. I mean, the economy is pretty strong. Companies have a decent amount of cash, so it was already a strong M&A market to begin with. And I think there's two areas of this legislation that may even increase that. One being the general decrease in tax rates should likely just create more available cash inside of companies. That could lead to more activity. But even beyond that, with some of the changes in the international tax area, that there may be the availability, a lot of cash sitting in foreign subsidiaries that comes back to the U.S. that could also be deployed in the M&A market potentially, leading to even more activity than we already started with.
Yeah, absolutely. And as you mentioned, I mean, we've had a ton of activity over the past few years. I think as we expect that will maintain the same pace and maybe even increase a bit. I think all the questions we've been asking from a structuring standpoint, all the tax issues we're normally been thinking about, it's all the same questions. I think some of the rules and the answers are a little bit different, but structurally things are the same. So we think about the tax rate that's going to be associated with the sale of a business. Capital gains and dividend rates are basically going to be the same, old law versus new law. But I think where you see the real changes are on these enhanced tax rates or the lower tax rates on corporations and the pass-through deduction, to the extent that those are going to be eligible for use on the sale of a business. That really lowers the tax cost on the exit. I think when you take on the flip side, if you're on the buy side, those lower rates will ultimately probably lead you to value the attributes you're going to acquire a little bit less than you did before. So maybe in a case where you would have paid more for a tax attribute, it might lower what you'd be willing to pay. So I think they kind of change your mindset a little bit, but it's the same type of questions we asked before. It's really with the other one, as we think about, we've gotten really used to levering up businesses pretty heavily. So adding a lot of debt onto a target business. Now with the potential business interest deduction, I mean, that really might change how you even approach that.
Because now interest is limited to a percentage of taxable income.
Exactly. And I think in some cases, that may just be a temporary difference that you'll ultimately be able to use any limited interest as a tax attribute on the exit. There might be a character difference between an ordinary deduction and a reduction of capital gain. But ultimately, it's something to really consider as we proceed. So I guess, how would you approach deals at this point? What are things that you think everybody should be thinking about?
Well, to your point, the change in the tax rules don't completely change the entire nature of an M&A transaction, but there are a lot of details that really do probably change. And so in any active deal at this point going forward, I think the key is to really start modeling results more closely than you may have before, where some things may have been or seemingly been relatively obvious as to what the general result will be. That's not necessarily the case anymore. So, for example, some assets that used to be capital might now be ordinary assets. The way that the beneficial rate for non-corporate business income applies doesn't necessarily apply to income created in a transaction the same way it does operating income. And there's a lot of things along those lines that may be slight differences in the grand scheme of things, but could have significant economic impacts on any individual transaction, and which also probably require a lot more advanced negotiation in the transaction, necessitating more lead time to understand what those things are to be able to get those incorporated into a transaction document.
So they may all be relatively small items, but you take them together and it's a lot to think about. I even think about things like reps and warranties in a purchase agreement and concepts like who files a tax return. A lot of those items have changed a little bit with the new rule. So there's a lot to think about, and really to get with your advisors and talk those through and see how you need to integrate those into a deal. Maybe it's in process, or maybe you're approaching a transaction. There's a lot to think about.